What's up, everybody? We missed last week. I was very sick. I got some death cold that I really don't know exactly how to explain it. It was like the nastiest flu I've ever had in my life. But I'm back, ready to go. Did a couple videos, this week, kind of chill, not too much talking, but I'm feeling pretty good today. Excited to be back with Kashop. We haven't gotten to talk about stuff in a minute. When all of these things that are happening are things we've been talking about for a while. At the top of the show, I wanted to highlight this chart, this tweet that I put out a while ago. Not to pat myself on the back, just to pat myself on the back of the comments. So basically, there was comments that I got for the last, I don't know, when did I post this? It said July. So basically, this chart is kind of showing gold moves first, copper then usually leads oil, and then oil usually moves last. Didn't say anything about, hey, we're going to go heavy and start buying oil on this day or anything. It was just this is what the cycle looks like. At some point, oil will most likely move. The amount of hate, and I told everybody I saved all the tweets, which I did, but I'm not going to put those all out there. There's a lot of tweets of people just hating on how ridiculous this is, and the fact that oil is a dead relic. We're going to be on solar energy at a certain point. We're going to stop using it. All types of shit. It's like saying, to me, it's kind of like saying like we're going to be done with coal tomorrow. Like it's not true. We're not going to be done with oil tomorrow either. It's not true. None of these things are true. People will cite EVs, whatever. The fact is that as there's less coal, like less people producing coal, trying to seek out coal prices will go up because there's demand and less supply. And same thing with if we're all on EVs, there's going to be less supply and then there's going to be still demand. So it all goes back to supply and demand, and just kind of pointing to the fact that like this is starting, and I think this is just the beginning of this move in oil. And we've seen this big move already. I wouldn't be surprised to see a big move down. I wouldn't be surprised to see, some volatility here. I'm not saying this is going to be a straight up and down road to 100 and then 200 and then 300. I'm saying it's probably going to get to 150 at some point. But at the same time, it's going to take time to do that. So be patient here and stay ready, because I think there's a lot of stuff coming down the pipe. So, Kashop, now I think I can kind of take this question mark off. I think we kind of can see what these situations are. Currently, you could say Venezuela was actually the bottom in oil. We talked about that quite a bit. I talked about the news failure event was the reason I was going to buy oil right there on that day. And then, this ratio starts to roll over, and that's basically when oil starts to outperform the Dow Jones Industrial Average. And so as this is rolled over, now we see that this question mark could be Venezuela or Iran. So what are you thinking about this situation? That's something that, I want to talk to you about a little bit, especially like right now you're in India, you live in Dubai. You're going to get back and forth. You're basically going through a war zone to do this. So can you highlight this a little bit more, especially for like us in the United States who really have no idea exactly what's going on? Yeah, we can read about it. Everybody's pontificating about it ad nauseum currently. But what are you seeing out there? What are you seeing in this situation? And how do you think it's going to affect shipping, oil, and the energy sector?
Yeah, sure. Thanks, Jason. So last Friday, everyone went to bed thinking the world is pretty much normal. Yeah, there's a genocide going on in Gaza, but we are kind of used to that news by now because we are hearing it every so often. And yes, saber rattling between Iran and Israel and the US has been going on for a while. And then, yeah, you have some shit blowing up with the cartels in Mexico, and then you have this abrupt invasion of Venezuela by the US. So you have all these things going on. But I would say overall, people were complacent. And, Dow's at 50,000. So why do you have to care about all these things, right? I mean, that was kind of the opinion that people had. And then Saturday, that started to change. And by Sunday, it was obvious that everyone should freak out. And the events of this week have proved that you're always better off panicking first than panicking after the herd does. So, if you panic bought oil right at the beginning, yeah, it was volatile. It moved something like 8% in a day, but you still did okay. But now the question is, if you're panic buying now, once we have had a full week for the markets to price in these moves, then what are you really doing? So I think that's kind of what it comes to. So there are two ways to look at it. So one is this is going to blow over, and all this volatility, it's like when Keynes says in the long run we are all dead, but the full quote is that there is no use of an economist, if all I'm paraphrasing here, when all he can say is that once the storm is past, the ocean is calm again. So, if you're making that kind of prediction, then, that's really not a job. That's really not something that you should be doing. So the
Mhm.
way to look at it is what is going to be the long-term consequence of what's happening here. I'm not talking about, you buy oil, wait for it to go up $5 and you sell it, or you short it and wait for it to get volatile, whatever. I'm leaving that aside. So, what are the broad implications of these moves? And well, you're seeing that pretty much so Qatar has shut down gas production. Israel has had to shut down their fields as well. So now what that tells you is that the LNG market is going to get very, very tight. Now it's the same thing like Kuwait is shutting in oil production. Pretty much everywhere producers are curbing their production. And the reason for that is because they can't get their supply out. So when you have the situation, yes, it looks like oil wants to go higher, and that's the question is whether it's going to be temporary or it's going to be a little more long drawn. And the way to answer that is, do you think this conflict will drag on for a while, or will it get resolved quickly? Now I think this is going to drag on for a while, because it's kind of like Israel poked the hornet's nest, and now the hornets are angry, and it makes sense that they are angry. So I think this is probably going to last. I mean, so Trump thinks it's going to last until September. So that's until the time where he has got the authorization to fight this war. It may drag out a bit longer. And even if everything just miraculously turns on a dime, and all the oil fields are brought back, all the plants that have been shut off, all the chemical plants, the fertilizer plants, everything, all of that is brought back, you're still going to look at something like 2 months worth of disruption is going to be there. Now that means 2 months worth of higher profits for, say, whoever is managing to produce those fertilizers, or the American LNG terminals, which do have the supply of gas and can load those LNG vessels. So for some of those companies, you're looking at 2 months of great profits. And of course, if this drags on longer, then it's anyone's guess who the winners and losers are. Because you might think, yeah, hey, oil is going up, I'm going to make money by buying XYZ oil stock. And then the company is like, sorry, guys, we have to shut down production because we can't charter vessels to take our product to market. Then, you're kind of screwed if you buy those stocks and end up in that situation. So the way I would see it is everything is an unknown right now. And when everything is an unknown, it is not like you should rush to buy this or that or the other thing. It makes sense to build cash. And even if you are ultimately wrong, ultimately right on where the prices go, it still makes sense to build a cash buffer, because you don't know the path that it will take to get there, and you don't know how much leverage is in the system. So, for instance, would I buy crude oil right now? No way, because I don't know how much oil has been bought on margin and what moves are going to happen over this weekend. So, I would definitely not be buying now. If you ask me whether I would buy, like I do have a oil stock in the portfolio, whether I would buy that stock, even though it has gone straight to a 52-week high, I would say yes, because it's still a value stock. So it really depends on how you are trading it. For me, I would say it makes sense to build a lot of cash. It makes sense to look at anything beyond the obvious move and look for the second order effects, look for the other cheap stuff that you can get, where you will make money no matter what happens in this scenario.
So, what do you think is the next area that people should be looking for? That's the question that I've been asking as well. For me, I'm always following strength. That doesn't mean it's always the perfect thing to do. It's the way my trading strategy works. It's what I do well. So we're in a lot of energy currently. Um, we're in a lot of metals currently. But once again, it's what's next. We got some agribusiness stocks, fertilizer stocks are starting to look good. What are some areas that you think those second order effects are really going to affect currently that we can start to look at, to me, the way I do it is, if you do have cash, like let's say you do exactly what Kashap said, or you are already in that position, you have a bunch of cash on the sidelines. what I would do is, ask Kashop this type of a question. Then we'll kind of dig into it. And then some of these names in those sectors, I would put buy alerts around, just understanding when they're moving into a signal that I want to get long. That doesn't mean it has to look like my signals. You could be a mean reversion trader. You could buy, dips. You could buy breakouts above moving averages. You can buy breakouts of 52-week highs, 100-day highs, Bollinger Band breakouts, whatever it is, but creating alerts around that. So, Kashop, what are those areas that you're thinking of? Do you think it's fertilizer stocks? Do you think coal has any beneficial use in this type of a trade? What are you looking at?
So, full disclosure, like I don't mean to sound bearish on all these assets. So, I do own gold miners, I do own oil stocks, I do own tankers. So, I am in all of these trades. I am in copper as well. It is just that I would not be looking to add to any of those positions right now.
Yeah, I agree.
So,
Yeah.
yeah. So where I would look to add is I think I need to increase the exposure that I have to chemical space because I do have a chemical stock, but I think now it's not enough because firstly, if you look at the charts, they're all dirt cheap. You look at the valuation, they're all dirt cheap. Now the question is, what do you buy? Because you need to buy, so chemicals need, let's say you take fertilizers, perfect example. So you need natural gas, which is kind of your feedstock. But if you cannot get your natural gas, then you cannot make the fertilizer. So even though, yes, fertilizer prices may go up, the company that you buy, the stock that you buy may not benefit. So you have these nuances, but that is where I'm interested. And the other sector that I'm interested in is completely out of this trade. It is software. So I just put out buy alerts on a couple of software stocks so far this year, and they've done very well. I think I ended up catching some form of interim bottom, but even if not, these are great value stocks. So you want to get into these sectors. So other than the war trade, like this has gotten our attention so much that we have forgotten the end of the AI trade. And the AI trade was all about, ChatGPT is going to replace pretty much every software as a service company. And now we are realizing that, well, private credit is a scam and most of these companies are going to go broke because, so BlackRock recently said one of their loans, which they had marked at 100 cents to the dollar just 3 months back, is now worth zero. So you're going to see all these cockroaches come out. You're going to see this AI trade just completely collapse. And who benefits? The people who said, well, software is dead because ChatGPT is going to do anything. So you have to start looking at those companies. And if you're looking at a scenario where inflation picks up, where crude oil picks up, where this energy crisis lasts a while, then who benefits? Well, if you're, let's say you're a Colombian oil producer, just one example, and you have really no relation to this situation, but you can take advantage of the global market pricing, well, then that's a good area to look at. So, and you should definitely avoid the losers. So I would say the biggest losers here will be any country which relies heavily on LNG for its electricity. So even if not heavily, if it's even say 5-10% of their mix, then they are going to be impacted because that 5-10%, where are you going to replace it from? So if you're looking at South Korea, if you're looking at Japan, I would say be cautious, especially if you're looking into the industrial stocks in those countries. Because 2022, what happened? 2022, we had the Russia-Ukraine war. And when that happened, all the chemical plants in Europe shut down. And the reason was because they couldn't afford the electricity bill. In fact, you had a lot of businesses shut down. Entire Europe got deindustrialized in that period. And the reason was, well, they couldn't afford it. So when you get into that situation, then who benefits? People who are pretty far away from that. So if, say, industries in the Middle East lose out, then industries in South America can gain, or industries in the US can gain. So, you can play that game, but that's a tough game to play. So I'm just sticking to what I have. I'm looking at new buys in software, and I'm pretty much not doing anything else.
Yeah, it's interesting. I've been finding a lot of people getting interested in software currently. Um, for me, it's still like it's always environment for me. I'm always thinking of what the environment we're in and what's going to work the best, and depending on the environment. Now, software, I know it looks cheap. I know there's some names in there that are set up pretty well. I'm not saying they're not. But it's similar to like, would I start buying REITs currently right now in this environment? Probably not. When I start buying consumer staples, even though maybe a couple of them look good, it wasn't really broad breadth in that rally that everybody's been citing recently. It was just a few stocks. But either way, it doesn't really fit the current market environment. I'm wondering about software though, because that's an interesting one. So I think it's an interesting place to look. My thought on it is that it might be under too much pressure from the inflationary environment, all the inflationary factors we have going on. But software also has pricing power, but also utilities do too. So passing it back to you, like, do you think software could thrive in an environment where we're seeing this type of inflation, where we're seeing this type of, let's say, even like global turmoil and so on?
So, to be clear, I think software as a category is still way overvalued. I mean, you have so many companies selling at 20 times sales, 30 times sales, which I think is ridiculous because even if you're growing your sales at 100% a year, that's still you're paying for a lot more years in advance. And I would not do that. So, the software companies that I have picked, they are trading at 3 times sales or less. So, they are really dirt cheap and they are growing their sales, which means few years from now, the prices that I pick will look like tremendous value if they can continue their growth path. Now, the big question is that if they can continue their growth path. So the AI bulls say that AI is going to replace all of coding, all of software, and you don't need application software anymore. And all of SaaS software as a service is a zero. If you discount that view, then I think the stocks that I have bought will do well. So I have bought something very cheap. That's the distinction. So the problem with software, IGV, and whatever ETF you pick, yeah, it has gone down, but the price to sales is still very elevated. And IGV is basically Microsoft, so it's not even a good
Yeah.
ETF to compare. So,
Yeah.
so
No,
if you
good point.
ignore that and yeah, if you look deep into the names, you will find good stocks. So that's what I have done.
Okay. So I wanted to answer Paris had a question, and I was sick this week, but I don't think I was this sick, but you never know. I saw one of your posts booking some profits on energy trades early this week. I found it unusual given your trading style. Can you explain why you book profits? Um, I don't remember that. If somebody could send me that post, because I do not remember saying anything about booking profits. I do remember last week saying something about I don't think it's time to put on a bunch more trades right now. And the reason why I said that is because if we're looking at, just looking at my portfolio, it is full of basically every trade that's going to benefit from this type of event. It's full of things that have been doing well this last year and into this year. So I don't feel currently like it's time to put on a bunch of new trades. I think we're set up very properly for to make money in the energy trades. I think I'm set up very properly to make money from the commodities cycle. I think it's diversified enough, especially across countries, different sectors, and so on, that I'm not worried about getting killed currently. But at the same time, I don't want to add to the trades that much because I have a ton. I mean, like literally, if I look at my futures portfolio, and there's trades that I don't list. I don't list heating oil. I've talked about that a bunch of times. So I don't list heating oil at all. That's something that a lot of people don't trade. A lot of people don't understand it. A lot of people don't understand the contracts. Some of them are liquid at certain points. I don't put out trades like that. But like if you look across the energy complex, we're looking at like oil in different countries through different indexes, or sorry, through different brokerages, through different futures exchanges. And then if we're looking at the energy stocks, like there's a lot of energy stocks, individual names or sectors and so on in the portfolio. If I look at the exposure to copper, to industrial metals and so on, like there's a lot of exposure. There's exposure to coal, there's exposure to fertilizer stocks. At a certain point, it's like, how much more exposure do I want to have in this? And it's not much more. It's really not anymore, honestly, currently, because there's a lot. And that's all. It's not that I'm bearish or wanting to, and I never take profits on things. There's sometimes where I'll tell people, hey, here's a Fibonacci extension. Do I really believe in Fibonacci extensions? Absolutely not. I do not. It's not a way I trade, but some people are target traders. So, hey, here's a target. Here's where you guys can get out if you want to. Not my style, not what I do. So sometimes I'll put out stuff like that, but that's about it. So let's keep hopping through these, Kashop, because I know we got a lot of stuff to get through and we only have a limited amount of time today. So going through gold and the energy sector, this is an interesting one because it's offsetted. So I was going to offset this. It didn't, quite line up right. I didn't want to do that because that makes me feel like I'm curve fitting, even though it's technically not. I felt like I was. So it's more here's the energy trade. So we saw gold. We'll start out with gold. Gold made that big move in 2020, all the way to, I think it was around 1,200 at one point, all the way to 1,900. Maybe no, it hit 2,100 that year. You're right. I'm thinking of 2011. So it hit 2,100 that year. Then basically went sideways, did nothing for a long period of time, then broke out. That was from August 2020 all the way into the end of 2023 into 24. So almost 3.5 years basically of sideways. Then we have the energy sector, which topped out really in 2022. Some people will argue 24. Really, if you look at it, it's just been sideways since 22. So 22, we have another, few years, 3 years basically, and now we have that breakout almost, a little bit over 3 years as well, kind of linking up together. But my thoughts here are that maybe energy at some points looks very similar to gold, especially as these cycles work. You see, one will go at a time. And I think a lot of people are talking about energy being like overdone here. And then, and if energy is overdone there, I think that's a ridiculous way to think about it. It reminds me of when we would get on and talk about gold when it first started moving, Kashop. So gold starts moving. Everybody's like, well, this is the end of this. This can't keep going. Gold has gone up, to 2,500. It can't possibly hit 3,000. That would be insane. And then it hits 4,000. And the more people are saying it's a bubble, it's a bubble, it's a bubble. It's all going to burst at some point. Then it hits 5,000. Now we're above 5,000. For me, it's the fact of I know the way the cycles work. I can't predict when the price is going to move. That's going to be technical analysis, price action, systematic trading. That's going to get me in and out of those things. But my thoughts are for Kashop. How sustainable do you think, especially fundamentally, how sustainable do you think the move in the energy sector is? XLE, OIH, any of these things, just as a whole, because as I know, if it's going to move, the whole sector is going to move. Everything's going to move in it. We're going to find the outperformance, but once again, the whole sector is going to move. So do you think it's sustainable here? Do you think this is something that's a structural thing, or do you think this is more like news, and news is kind of driving the prices up?
So I would say for now, the news is definitely driving the price up because you do not get crazy momentum without this kind of news. But if you look at the structural factors, then yes, that's definitely in place. And the reason for that is, like I said, the shut-in production. So the oil fields that are shut down, the oil wells that are shut down, it is going to take, even if everything normalizes, it is going to take a while to bring them back up. The producers need to assess damage and they're going to be shy about bringing their production back online full steam. So that is going to take a while. And where does the world go for those additional barrels in the meantime? Because the supply demand balance is pretty tight on a daily basis. So the price moves on inventory levels. It does not move on supply and demand. It moves on the inventory levels. And the inventory levels are getting tightened. So, firstly, you have inventory sitting in places from which it cannot move. For example, Kuwait. Kuwait will not be able to export its oil, so they are shutting down fields. So, shutting down wells, sorry. So, and then you have production in places where the oil can move, where they can ramp up. But let's say you take the Permian and you think the Permian is going to ramp up. Okay, great. How many drilled and uncompleted wells are there in the Permian? Well, not many because that number peaked in June 2020 and it has been declining ever since. So even if you can bring in some barrels from somewhere else to offset the losses, the refining capacity is gone because now all the refineries are shut. So how do you move the oil, refine it, and get it to market? Well, you can't. And that's why you see gasoline going up. That's why you see heating oil going up. And I'm pretty sure in 2 to 3 weeks, airlines are going to be hiking ticket prices like crazy because aviation fuel is going to go up. So you have this other leg, which is first, there's the hit to the oil supply, the crude oil supply. Second is the hit to the refining. And the third element is ships are not moving. Ships are stranded in the Strait of Hormuz like it's a giant, ocean parking lot, and they can either move in or out. Now, what happens to that inventory? What happens to those vessels? Well, those vessels are now effectively out of the fleet. So the fleet shrinks, which means you cannot transport as much oil and refined products as you used to. So this mess is going to take a long while to untangle. And then on the other side, all of this is obviously inflationary. It's even more inflationary when you find that cargo ships are not moving and Musk has suspended all routes to the Gulf. So you take that out, then you are looking at pretty much a logistics crisis for the whole of Asia. Now, US is fine because Shanghai to Los Angeles, they take the Pacific route, so they are fine. But the rest of the world, well, it's going to be a tough situation. So putting all of that together, we see stagflation. And if the environment is stagflationary, well, then guess what does well? Well, energy does well, gold does well. So you're kind of back to square one, which is all the things that are currently working will continue to work, even if some of the ground conditions change. So I think this move has a lot of legs. And when people ask what is the next great trade, oh, great, you made a lot of money in gold. What is the next great trade? I think you should just tell them it's gold again. And it's that simple.
Yeah, I mean, that's the hard thing about it is sometimes this is the hardest thing to do as a trader, which is to stick with the things that are working. Like there's one of my favorite lines or stories and reminiscence of a stock operator is I think it's wheat and cotton, and I forget which one of them is showing a loss. So he's basically looking at wheat and cotton. He goes, okay, wheat was I don't remember which one, so let's just say it the way it'll make sense for everybody. So wheat was showing him a loss, cotton was showing him a gain. He then sold his cotton position and put the money into his wheat position. And he basically, wheat continues to move down. He loses a bunch of money on this trade. He keeps trying to buy the dip in it and so on and add to the position. And then at the end of the story, he talks about, what I should have done is added to the cotton trade, got out of the wheat trade, and I would have made a lot more money. And that's a similar thing with like when you look at, markets, you never know exactly what's going to happen. For me, I always just take the trades as they come. Energy starts to break out, I'm going to put on that position. Have cash on the sidelines so you can do that, or trade small positions, or trade leverage. There's a bunch of different ways to do it, but small positions is what I do. And so I'm able to hang on to something like gold in this uptrend and then go, okay, well, now there's some moves happening in the energy sector, so I'm going to start adding to those positions and so on. But I'm not going to exit my gold trade by any means. I'm not going to downsize it. I'm not going to get out of the position. People always ask me what they think is going to win. This is the thing. Like, it's like, what do you think? Like, it's kind of like betting on like sports betting. That's a huge thing now in the United States that everybody's way too obsessed with. And they're like, okay, what team's going to win? And even when there wasn't betting, people want to know what team's going to win, not to mention they want their team to win. You also have a bias, whatever it is. Like, once you're making money in a trend, you're biased. You like this trend. You like gold more than other things. It's going to be the best thing ever. It's never going to stop. And then when energy starts making money, this is the best thing ever. It's never going to stop. You start to pick teams, and really in trading, it's not a one or the other scenario. It's the cycle is going to work out the way it is. Gold has earned that type of large exposure in portfolios currently, but energy is now starting to earn that exposure in portfolios currently. So I think it's just continue to hang on to your positions, but also continue to understand, like, as these new trends are emerging, I want to be in them as well. And so we'll continue to make money on all of those. So people have been asking about the dollar, bonds. We want to answer this question for people. If we're looking at the dollar, what time is it actually? Got to check that. Okay, we're good. If we're looking at the dollar, we're seeing that there's this massive resistance zone between 100. Let's say like a lot of people are looking at 100. This is a weekly chart, line chart. I like line charts. I don't really care about daily candlestick wicks and whatnot. I want to know the closing prices on a weekly basis. So if I'm looking at the closing prices on a weekly basis, we're looking at 100.7 or 101. Basically, you could call it 102. And there's a huge resistance zone there. What do we think about the dollar here? Because this is the biggest piece of the macro puzzle, and you're the perfect guy to talk to about this. If we're talking about the dollar, we have a war scenario. We also have inflation. Looks very similar. Like people keep bringing up Russia, Ukraine. I think Russia, Ukraine was a little bit different because we were in a massive bull market for commodities at that point with a blow off top when the dollar got strong as well, all at the same time. This is kind of different. This is early in the oil cycle. Oil is just starting to move, but also we have the dollar, kind of in a very similar formation to what it did at the end of 2021. So what do you think of, the idea that the dollar is either going to continue to catch a bid, or do you think that's bullshit? Or do you think we kind of get up into this zone, chop around while everybody's panicking? What are you thinking here about the dollar?
So if you go back, I think it was a couple of days, Bitcoin and pretty much all of crypto had a huge rally. And the reason for that is you had the crypto crowd from the Middle East getting back into crypto and, lessening their banking exposure. Now, it is the same thinking in action with the dollar. When you have a crisis, when you have a sort of deleveraging situation where people want to trim exposure to what they own because they are little panicked about the future, what do? Well, they buy dollars, and the reason they buy dollars is because it is the world's reserve currency. It's been the most stable currency to own in times of crisis for a while. Now, you and I know this. It's not so true anymore, but there was a decade-long period where Japanese yen was considered a safe haven. So
Mm-hmm.
every time there was turmoil, the yen would rally. Now, that did not prevent the yen from hitting its fair value and probably, it's probably going to 400. But there
Mm-hmm.
was a period when yen bears just could not make the market listen to them. And we are at a similar point with the dollar where every crisis it is seen as a safe haven and it is rallying. But I think we will come to the point where the dollar goes like the end and it just finds its natural value, which is much, much lower because already we are seeing it in the central bank balance sheets. So pretty much all the world's central banks are net sellers of treasuries and they are reallocating that money into gold. So central banks as a whole now finally have more in gold than in treasuries. And this flip happened last year. It happened at the same time Morgan Stanley said 60-40 is dead, put 20% in gold, 20% in bond, and the rest in equities. So they halved their bond allocation. So these kind of moves, you're not going to see it. You're going to see it play out in the very long term. You're going to get a lot of these relief rallies until investors get the memo that no, dollar is not the safe haven. It is gold. It is something else. So once they do that, then in times of crisis, the dollar will stop rallying, and that's when you will see the real down move set in. So probably the dollar index goes to 80. I don't know how low it goes, but I see all the other currencies strengthening versus the dollar and gold strengthening versus all the other currencies. So, long story short, I think this is just a little bit of a relief rally which will not last.
Same here. And the builder made a point here. He said when the world tries to dollarize the U.S. big dogs on the world and shows them who's the boss. Now, here's the actual answer to this. It's not that. And not saying you're wrong. You can think that, but here's what I think about it. So if we're looking at, the world is trying to de-dollarize a little bit, but also the U.S. is trying to do everything it can to make the dollar weaker as well. Yes, Donald Trump will get on TV and say he wants gasoline under $2 and he wants the dollar to be stronger. Sounds good for normal people. What does he really want in the background? Well, we know he wants lower rates. We know he wants more stimulus. We know he wants to put out longer dated bonds. Whatever it is, all of those things are very inflationary. And the answer is he wants the stock market higher. What do you do in all those scenarios? Well, you run it hot. If you're running it hot, then the market's going to go up. The commodities are going to go up. Inflation will go up. and the dollar will go down. So that's the thing about it. At the end of the day, it's the dollar is very structural, which is why, you know, I'm always talking about the yield curve and so on, meaning short-term rates lower than long-term rates is what a bull steepening is, and we're still in that environment. This creates more liquidity. So this means banks are lending out more money because they're borrowing from the short end of the curve, loaning to people on the long end of the curve, and so they're making the middle on that. So as they're loaning out more money, the dollar is getting weaker as well. So there's a bunch of reasons why, not to mention they're kind of doing stealth QE currently. You know, rates did drop quite a bit. Now they're just paused currently. I'm sure the war situation will possibly change that as well. So a couple of things to just think about the dollar. I was going to go through a bunch of stuff, but it seems like we have a ton of questions. So why don't we just end on a bunch of questions here and try to answer some of these. You know, the first one was, how are we thinking about, from Builder, are you guys thinking about interest rates and bonds right now? I am always thinking about bonds, number one. That's the first thing every single day, probably on my mind, is what the hell is the bond market doing? And I'm not even kidding. I'm kind of a psycho about that. And understanding, you know, the long-term part of the cycle. For me, the long-term cycle is yields will go higher. There will be short-term, you know, just like Kashop talked about the dollar, there will be relief rallies in the dollar. There will be periods of time where the 30-year yield will go lower. But I think in the long run, we're probably headed higher. I've never seen a scenario in history where oil is ripping, and let's say oil continues to go up and the CPI is going to go up with it, because we know that's going to happen. And then yields are just like, you know what, we're going to drop here. The long-term yields are like, you know what, I'm going to buck this trend and we're going to start falling down. There are, like, people will say correlations change over time and correlations aren't causation and all this shit. Sure. A lot of things change. Yields are priced mainly through growth and inflation. Inflation being one of the biggest inputs for yields. Not to mention, inflation covers up a bunch of bullshit. So if you have a company that has, you know, let's say their earnings aren't that great, but then you have a bunch of inflation coming out there, their earnings are going to look a little bit better. So inflation covers up a lot of bullshit as well, so it'll make growth look decent, and both of those things together are definitely going to take yields higher. That's my thought on it. Kashop, do you have anything to add on bond yields currently?
No, I think you pretty much covered it. We can move to the next question.
Okay, this is a good one for you too. You know, what are you thinking about large cap US miners, AEM and NEM? You know, for myself, like I like AEM, but this is more Kashop's space, so I'm going to pass this to him.
So I was in the large cap miners in 2024. I rotated out of that into the small caps and the explorers in 2025. And I see myself going more in that direction and more towards the explorers right now. So if you are new to gold, I mean, I wouldn't discourage you from starting there because it's a great starting point. But for me, it's the small cap space that I'm interested in, the less than 500 million market cap space that I look at.
And then I did get a question. It was from Twitter, so I don't know. It showed up on here for a second. There we go. Okay, so no REITs. So it's earlier in the show, I talked about the fact that in this environment, I don't want to own REITs. So most people would hear housing, inflation. Why wouldn't somebody want to own REITs? REITs just do not perform very well in environments where bonds are not performing well. So if you see TLT moving up most of the time and like overlay that with XLRE or something, you'll see most of the time that that's when REITs really do well. You know, 2019, a really good period of time for REITs. You know, so basically you want to be in those during those periods of time. This type of environment isn't very conducive for something like REITs, something like utilities, even staples. All of these kind of, people always talk about them defensive, but they don't put that into the same category as why are they defensive? Well, they're defensive in the same category as when bonds are also technically defensive. So if we talk about bonds going up, you'll see REITs going up, you'll see utilities going up. And Kashop was trading with me and knew me in 2019 when I was trading all of these things and being long things like utilities. I mean, my portfolio looked like I was like 90 years old. It was like bonds, like calls on bonds, calls on utilities, calls on REITs, calls on consumer staples. It was literally like the craziest portfolio I'd seen in a long time of my own. But that was the environment we're in. So you'll see me change environments if that changes, and you'll also see me start to add to things like REITs. So Kashop, we'll end on this question. If we have time for one more, we'll get to it. But Freely asks, so Kashop, are you in any emerging market trades while the effects of the war are assessed?
I'm not. I'm very keen on India. I'm very keen on looking at something in Asia, but then Asia, again, the energy situation needs to be resolved. But yes, I'm definitely looking at it, and I think that's where the next trade will come from. And by emerging market, I include China here as well. So looking at Hong Kong listed stocks, looking at, I mean, so I'm an Indian, so I can easily trade on the Indian stock exchange. So I'm looking there, and I'm looking at Asia.
And so last one for Kashop. We'll have to answer this in a minute or so, Kashop. So just don't have a ton of time. But so Jerry said late to the show this morning, but quick question for Kashop. How are shippers being impacted right now?
So war insurance is getting cancelled. Insurance premiums are shooting up. And yes, the tankers, pretty much everyone who owns a ship is making a lot of money. But then we don't know how long this will last. And we don't know if at some point it just gets so pricey that the oil doesn't move, that the refined products don't move. So I wouldn't chase it. If you are in this move, set a trailing stop, ride it, because I have no idea how huge this runs. It can run, 2, 3x from here. But if you're not in this trade, I would be very, very cautious looking for an entry.
All right, guys. Thank you guys so much for joining us today. We'll be back next week. We'll let you guys know exact time. I'm pretty sure it will be Friday at 10 a.m. If not, we'll catch up with you guys on Saturday. Sorry, sometimes I get double booked on Friday mornings, but we will definitely see you guys soon. Definitely take care of yourselves, and make sure you're running trailing stops. Make sure you're risk managing well. Like, that's really what this game is about. A lot of people get on these shows and tell you about buying shit and all the great shit you can do and how you can make 1,000x and 90% win rates and all this bullshit. Really, the game just comes down to risk management, and risk manage well, and you're going to make money. All right, guys, we'll see you guys next week.
Bye, everyone.